This is Eric Mwade for the week of January 13th, 2014. Let's take a look at the pre-market action here with about 1 hour to go before the market open. We see the Dow called down about 8 points, S&P 500 called down about 3, and as of right now, we are looking at the Nasdaq called down about 4 points. A quick look at action overnight in Asia. We were pretty much unchanged there. And right now in Europe, also looking at an unchanged market. Remember, this is options expiration, so we do expect some increase in volatility. If we take a look at commodities, you see that silver is down 1.15%, gold is down slightly. We see that crude oil is down about 0.85%, but the big mover overnight is coming into this week. We see that it's natural gas right now up 3%, and I'll touch on that at the tail end of the video. Let's take a look at the market for this week on the Nasdaq. Again, the level to watch is 4,068.75, which is this previous daily closing high here. We still remain above that level, so this market continues being healthy, and that's just the takeaway. Now, if we break below that level, then maybe we start looking to be aggressive on the short side. For now, the markets look healthy. Take a look at the Dow. We seem to be forming a wedge here, which could turn out to be a nice setup for a move higher. The thing to take away here is the market is still above this level of 16,097, which was this previous daily closing high. So the market trading above that level, also trading very comfortably above the 50-day moving average, is a nice market. Until the time we break below the 50 and below the previous entry point to the breakout level, which was this level here at about 1600 or 16,000 there. If the market stays above that, it's healthy. A crack of those two levels, the 50 and the breakout level, is when you start getting aggressive. The S&P 500, same scenario. We are still trading above the buy point there. The market still remains above the 13-day moving average. It remains above the 50-day moving average, and that's a healthy market. Down the road, if the market ever moves back below this 1810 level, anything that breaks below that level and also below the 50-day moving average, then we might start looking for aggressive short positions. Let's take a look at natural gas. And over the weekend, I talked about the level where natural gas ended Friday's action, and it is this level here with this, where I'm drawing the blue line. This level has been critical for this instrument here. Was a nice entry there. It found support there, which was this nice entry for a small rally. It eventually found support here, which was this level before the most recent move here, and you can see now seems to be taking back above the blue line, which is this level here, which also happens to be where the 50-day moving average is trading. So it makes sense that it's bouncing off that level like we discussed over the weekend, and also happens to be an area here, if you draw the line, which was previous resistance here, here, and here. And once we broke out here to the upside, market has come all the way back, and back testing that break at the blue line also happens to be where the 50 is trading. So it makes sense that we are getting a bounce in natural gas. So I've talked to you guys about the buy point down the road on the weekly chart, and just to remind you, the buy point is whenever natural gas eventually, if it can break out above 21.79, that would be a fresh breakout there. Would be a nice time to get back in this chart here. If it doesn't break out above 21.79, then maybe this is just a short rally that is gonna fade. Eric Mwade, have a great week. Peace and blessings. Woo!